Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take another look here at Ethereum, and happy Friday to you once more. So what we're going to do is, of course, take a look at some previous support and resistance levels. That's where you see all these blue lines, and kind of help explain where they're at, and obviously see what's going to happen next if we were to lose potential support level. Okay, so we're going to take a look at that and much more. If you're new to the channel, not a financial advisor, I love teaching people to trade. If you can learn something here today, I've done my job, so I really hope to hear your feedback if you want to let me know if you learned a thing or two. And if you didn't, that's okay too. No worries at all. I do appreciate constructive criticism. Feel free to also become a community member if you'd like. CryptoCache.tech is the website, link in the description below, where you can register to have access to my trading academy, my signals, as well as my trading community, where I teach you essentially how to become better traders. Okay, we all work and learn and grow together. It's an amazing experience. That's half the reason why I made these videos too, is to help you kind of learn what you can. So I'm going to try to impart as much knowledge as I can to you and help you understand that. So what we're going to do here is with Ethereum, take a quick look here, first of all, big picture, just so you understand where these lines are coming from. So we have this previous all-time high back in 2020 for Ethereum, which is right around 478. Okay, then it reached its second all-time high, or it broke its previous high, established that as a low. In fact, let's go ahead and take a look at that here. You can see the price comes up, tests, gets rejected, comes back up, breaks through, comes down, uses that as a support level, and essentially bounces. And what that bounce does is that bounce spends roughly about 1.5 to 2 weeks. No, wait, that's probably more like about a month. Close to about a month worth of time here from November to December, and then it breaks again. Okay? And then what it does, when it breaks through this little resistance level, it comes back down to retest this as a support. So all these levels here that you can see are relevant in the grand scheme of things here, if in fact the price were to continue lower. In other words, if we see the price action continue lower, we should experience somewhere in the range of $900 to be a support level, as well as $690, we can say round number 700, as well as 500. So 500, 700, 900. I'm rounding up a little bit for each one of those, but those are very key levels here, which would be great dollar cost average targets. So in other words, 910 would be a DCA target, or 920. Just a cut above those levels so you can get filled if the price were to wick down. Okay. Again, just something to kind of think about. So that's kind of where we're at there. Looking at the moving averages, we kind of see here, we're underneath all three moving averages. Same scenario for most coins right now. In fact, Bitcoin is exuding very similar behavior. It has these similar patterns. Only difference is it didn't have this little descending pattern here that broke to the downside. It essentially went sideways, whereas Ethereum was breaking kind of a descending type of wedge. So that's why we saw the breakdown here happen so fast and so hard, because it was a descending wedge. It's basically what a bear flag looks like, or a bear pennant. There's a lot of different words you can use to describe that. It's pretty close to both, but generally speaking, when the price comes down, retest, works itself into a wedge, and then comes back down again. That's essentially a continuation there. Okay. Now, what's to say it's not going to happen again? Well, there is no guarantees, of course, depending on how Bitcoin performs. But generally speaking, this is somewhat to an exhaustive state here, so we should experience likely a continuation of the side before it were to come back down again, if it were to. Once again, a lot of this is contingent on Bitcoin's success or lack thereof. At this point right now, Bitcoin is liking to retest the 20,000, 21,000 range. Okay? As it continues to do that, it could potentially become weaker and the price could come lower. But there's a lot of volume at that point. And we can see the same thing here as well. As soon as the price comes down to about 1,200, maybe a little bit lower, you can see a massive amount of volume increasing, and of course, obviously the price is decreasing here as well. Don't get me wrong, it's not great. We had a bearish engulfing candle yesterday. That does imply today will be red, but that really also helps us understand that we're reaching an exhaustive state. We've got a decent amount of volume accumulation at this level. If we're to zoom in a little bit further, you can see a lot of volume accumulating here, as of course we did previously at the 1800 range. But again, we lost that as a support. That'll be a resistance level now, and that's essentially what we need to acknowledge. So again, big picture here, I don't think we're in dire straits. Once again, also confirming the fact that you should have your DCA targets set up. In other words, you should have some buy orders at 950, 750, 550, somewhere in that range, to ensure that you get filled if the price comes back down, because it could and very well should happen. I'm just saying here that with this exhaustive state that we're seeing, with the price action coming down as low as it is, and us seeing a 9 on TD sequential, that really tells us a lot, and the fact that we shouldn't go much lower in the immediate future. Now again, there's no guarantees, right? Because you look back here, you see a 9 previously. Hypothetically, it should have went up, right? most cases the price will recover when it hits a 9 and come back up and retest a previous low. In this case, it didn't. It continued to make this descending wedge type of pattern and broke to the downside. But after we've hit this 9 on TD sequential here so far, we should experience at the very least, some sideways action. Okay. I don't think we're going to see the price just drop from here. I think it's going to take a little while before we get there if we were to. All right. So I think that we're getting close to the bottom. Okay. So it wouldn't be a terrible idea to go ahead and consider dollar cost averaging into Ethereum right now. All right. So taking a look at the 4 hour, what we want to acknowledge here as well is some pretty obvious stuff here. Let's go ahead and take a look at it. We got rejected off the 20-day SMA. And of course, the price action is coming back down as well. So until we can get back up above the 20-day SMA, we really don't have much of a leg to stand on. So we don't have anything in the ways of confirmation just yet. Taking a look at this here as well, we can see we're kind of trending closer to 30 on the RSI, which is good. That's holding as a support level, but it's not great. We want to be closer to 50. Okay, preferably over, but closer to 50 would be nice. So in order to break this trend that we're having here right now, because we kind of see here, let's take a look. We are making... In fact, it'd probably be a lot easier if I squeeze it out here. Take a look here. We are making lower lows and basically lower highs. So you could say this is extremely disadvantageous, which I would say that. In fact, I just did. That's just something we got to acknowledge, right? And the main fact here is that this is not a great sign. So when the 4 hour time frame is telling us we're making lower highs and lower lows, that's never a great. And here's the thing that's interesting about this. Bitcoin is not making lower lows and lower highs on the 4 hour. It is essentially trying right here to make higher lows. Okay. So again, depending on how you look at it, you could say that Bitcoin is performing better than Ethereum, but we're still in a situation here where we have to acknowledge the fact that the price could come lower, and it might be best to potentially try to wait. Or potential theory I have is that we're going to see a green weekend this weekend based on the fact that we had such a bloody red weekend last weekend. Even though we have a lot of fear, uncertainty, and doubt in the market, there's going to be a lot of people getting paid today. They're going to be adding to their positions, and the price should inevitably increase this weekend. That's my speculation. I don't know if there's any guarantees in that. I wouldn't guarantee it whatsoever, but I can tell you though that it's more of a likelihood at this point because we're at this exhaustive state. Again, we're at 9 on TD sequential on the daily. If we take a look at the 4 hour as well, we hit an extreme exhaustion back here, came all the way down to an 8 a second time, and now we've been kind of range bound ever since. Okay, so I do personally feel like we're going to be range bound between 900 and 1400 for some time. That's my speculation, just like Bitcoin's going to be stuck between 20,000 and 24,000. Until we break either of those two support or resistance levels, we can expect buying low and selling high, or selling high and buying low, essentially as one of the better strategies for the moment. Okay, so that's kind of where we're at here. At least as a community, we are trading, for the most part, in a range. Okay, so I recommend maybe consider getting on board there. And our last little constellation here is we are making higher lows still on the 1 hour. Now, this is a bit of a stretch if you look at it there, of course, depending on the time frame. The 4 hour kind of tells us that's a different story. But what happens on the 1 hour translates to the 4 hour. What happens in the 4 hour goes to the 12 or the 24 hour, right? So in that sense, the more we can continue this progression slowly upwards, the better off we're going to be. Again, this is a bit of a stretch. I don't like to count on patterns on the 1 hour. I don't think they're super reliable, but it does inevitably adjust things later down the road. So just something to acknowledge, but here's the last little key thing here to understand is that we're still stuck under the cloud. We've been under the cloud for quite some time. I can't even remember the last time we weren't under the cloud. Actually, it's only been a couple of weeks when you think about it. But again, depends on the time frame that you use, of course, but here on the 1 hour, you can kind of just tell that there's not a lot of great signals here. What I mean by that is that the lagging span is soon to intersect with the price action. It basically tells us if we have a short position, we may want to consider closing that. We have the conversion line and the baseline intersecting here, essentially telling us that momentous trend has lost itself. In other words, very similar to the MACD convergence, where you see the 12 intersect with the 26 in upward fashion. We're seeing that happen right now, and that transition helps us know that we're on the right side of the tracks here. But it's not the perfect right side of the tracks, right? So we've got two out of three things here telling us that the short position should be closed. The very last thing we need to wait for would be confirmation for the price action to get back up above around 1140. And at that point, we could possibly consider adding to our position and the price will continue higher. But if the price comes up here and gets rejected by the cloud and goes lower and we start making lower lows, again, continuously, that'd be something we'll want to pay attention to and watch out for. That would be disadvantageous whatsoever, completely, and not beneficial whatsoever. So it's absolutely something we need to pay attention to. But for now, again, if you have a short position, you may want to consider closing it because it does look like there might be a reversal soon. We might see, today being a red Friday, we might see a green weekend. Okay. Again, it tends to happen that way in most cases. Last weekend was the exception, but 5 out of the last 6 weekends have been green, to give you perspective. But again, the fear, uncertainty, and doubt hasn't been at a 7 yet either. So we got to acknowledge that there's going to be some people with some seriously cold feet this weekend. Yeah, again, they're getting paid. Are they going to go ahead and invest? It's hard to say. I know I am every single day. It's funny, actually. I just lately I just added like a little auto withdrawal, and I basically just put $20 in a Bitcoin and Ethereum every day, and it's just slowly stacking my cards in my favor, because eventually these coins will be worth a lot more. I mean, Ethereum was at 5,000 6 months ago or 7 months ago, maybe longer than that, but it hit 5,000, almost 5,000, not so long ago. So we got to recognize that even though it's down 80% from its highest point, we should and could very likely see a continuation of the upside back to that level to retest that in a couple of years, if not sooner. Okay. All right. So again, invest what you can carefully. Do not do a lot. Do not put all of your eggs in one basket just yet. We're not truly at the bottom, but I think tentatively for the moment, we are at the bottom for now. Okay. So if that's any consolation, I don't know what is. So, all right. So thanks again for joining me here. Hopefully you learned something. Of course, if you did, comment below, like, subscribe, all that wonderful stuff. If you want to become a better trader though, CryptoCache.tech is his website. I have a link in the description below. I do offer discounts for military and third world countries. Thank you so much for your service. And let me know if you want to consider becoming a better trader. It's a really awesome experience. Signals, community, and academy. I look forward to seeing you in the next video. Have a great rest of your day. Take care.